Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, social media. Gives us a little bit different view than just me looking at the charts myself. We can look at other people's charting skills. Um, it's going to be related usually to three topics: wealth building, commodities, and or financial topics. So let's dive in here. Let's take a look and see what people are sharing within those topics. If you want to follow me at Finance Grow Finance, and if you want to join our community, finding-value.com, we do have a discount going on called LEAP, because it is leap year, 29 days in February, and you can try that discount on the monthly and yearly memberships. Description link below if you're interested. So live shot of oil stocks, despite the $76 WTI price, lowest global oil inventory levels since at least 2017, drawing counter-seasonally, record high demand, will and intent, 10 to 15% plus free cash flow yields at spot, superbly strong balance sheets, TMX in a few months, rapidly decelerating shale. Yeah, it's a good mix for oil. Housing is unaffordable for a record half of all U.S. renters per Harvard. Well, that's what happens when you get a large demographic coming through home buying years. When there's a shortage of something, it becomes less affordable. If you have a massive shortage of something, you have to price people out until you build those homes. And if the cost to build those homes is still unaffordable for those people, then those homes will never be built. it's pretty simple. Supply demand characteristics and the cost curve of where homes are affordable for these people. People are reading way too much into today's price action in relationship to the uranium sector. Save yourself the trouble of trying to explain every big daily fluctuation in this ever volatile uranium sector. Completely agree with Yellow Bull there. Just because something goes up, just because something goes down, and sometimes they will be big moves, that you have no idea what caused the move to occur in that size. It doesn't matter, guys. It doesn't matter why the reason anyway. Most of the people that have news, I don't know if you guys know this, but they make up the reason. They just make it up. Unless it's blatantly obvious, a lot of the times they make up why the price moved and then they just throw it out there so you guys can consume it. I mean, that's really what it is. I probably figured that out not too long into following news and price movements. I'm like, these guys are just making it up. And then when you start reading charts, then you really start to know that they are just making crap up. So a lot of people ask the why. Completely wrong question. The better question to ask is, and something to know when you're an investor, you're going to get daily price fluctuations no matter what. The majority of them are going to be completely unknown as to the why. The bigger picture, longer time frame view is the fundamental big picture view. The fundamental and the technicals on the long term will match themselves. In the short term, you're just charting money flows and emotional feelings of the herd. So what I do is the fundamental tailwinds continuing to drive uranium higher, are they still there? If the answer is yes, don't worry about it. Don't worry about it. And don't get sucked in to where price is a dictator of your emotional state. You need to separate price and emotions from each other, and you should be looking at the fundamentals that are driving the price on the long term. That's about the only way I think you can make money in the stock market reliably and be able to be a long-term buy and hold investor. Nat Gas, it says he might be a smart but he's not wrong and actually tried to warn everyone many times. This is Bobby. It's not about warning. You're going to have these cycles no matter what. They don't know where the absolute bottom is. The majority of people, they don't know where the absolute top is. That's why short-term traders, there are zero that are billionaires. But yet there are a whole bunch of long-term investors that are billionaires. They don't know what the short term is necessarily going to have. But I think that we are entering despair in the natural gas market for um, for natural gas. It's going to be a great opportunity to buy when this thing turns and starts to turn back up. The return to mean as we come and turn back up. So that's yeah, I think that's where we're at. We're in. He's got circled here somewhere between capitulation and despair. I think we're in despair almost. Investors are throwing in the towel on commodities. Assets under management for commodity ETFs have seen a steady decline over the last 2 years. So this is commodity ETF combined cumulative assets under management. You can see from 15, 16, it's been going up all the way to a peak of 2021, 2022, and we've come back, and I think this is going to reaccelerate to the upside. Why do I think that? I'm going to have a training session coming up, or we'll do it on Sunday, whatever people want to do in the question and answer session. And I will describe how this actually works and why money flows between things. And I'll describe why that is occurring and interest rates and all that stuff to the best of my abilities. But right now, I think it's going to come back because we still have the market conditions for a commodity bull market to come. And that deals with credit expansion and the supply of commodities. It's the combination of those two things. We're in between those, the credit expansion at the moment. Coming down, Peter says JP Morgan released today. Stocks will fall 20 to 30% from today's levels. Small cap stocks will outperform large cap stocks by 34 to 59% over the coming 2 to 3 years. I like how precise they are, 34 to 59%. Yeah, like these guys are going to get that right. They're going to not get that right. Approximately 120 million barrels down in 40 days. We are minus 3 million barrels per day. It's a steady rate of decline. This is what the world daily inventory is, including commodities on water. And we're all the way down here. We're going from January 1st all the way down as we eat through inventory of commodities on water. So this is oil, of oil. Summer's coming. This is nat gas. You can see the lull. This is what I'm talking about, a few more months where we could potentially go down and then we increase power burn for the summer. And that will be our increase in demand. Here's Gary Savage talking about oil, and I like oil, anything oil related. Something to think about if you're freaking out about missing the rally in stocks. Since oil is in a bull market, and bull markets by definition make higher highs, I think we can assume that oil will at least rally to $100 during this intermediate cycle. That's roughly a 30% gain from today's levels. For that S&P to match, that it would need to go to 6,500. Keep in mind, stocks are already stretched insanely above their long-term moving averages and in dangerous territory of a crash when the buying stampede comes to a halt while oil is sitting on its long-term moving averages, not stretched at all. I like the potential in oil, and the potential in metals once the intermediate cycle low is finished dwarfs the potential in oil to significantly outperform stocks. So he's a big metals bull, precious metals bull, and he also likes oil. And this is oil. Oil should make a higher high during this intermediate cycle above 95 is what he's thinking. And then this is the S&P 500, wherever the top is. I drew something like that too, but I think we're going to be peaking out some point and hitting lower. But that is if the S&P were to have a 30% rally. Coming on back, we've got, while others attempt to win every lap around the track, it is crucial to remember that to succeed at investing, you have to be around at the finish. You don't want to crash, guys. You got to be around at the finish. It's not about winning every single lap around the track. It's about winning at the end of the race. Just in, JP Morgan warns the US won't get to a 2% inflation rate unless there is a recession. What are your thoughts and do you agree? I would probably say yes, I agree, but we're also having a lot of fiscal spending, which I think will make it tough to get 2% inflation, and I also think it will be tough to get a recession. So there's that in the background as well. Some good news about your education, simply put, if your goal is to beat the market, an MBA or a PhD from a top business school will be of virtually no help, says Joel Greenblatt. If you go to business school, you will learn a lot of things we don't believe, says Charlie Munger. So business school, yeah, it's probably something that you don't really need. I know my brother went and got a master's degree, and he has an undergrad in civil engineering. He got a master's in engineering, but he took a lot of finance courses and business courses. He said the business side is a joke. He doesn't even know why they're classes. That was his opinion. And a lot of the people that were in those classes, he was like laughing at them because he's like, "Do people really believe this?" And it was pretty funny. Know what you own and know why you own it. Peter Lynch. That also gives you the conviction to hold on to the companies. You have to know both of those. The uranium market today, CCJ. We missed 2023 production by almost 20%, and we will need to go into the spot market to fulfill our 2024 contractual obligations. That's how hard it is to find product. The market and their response. Sell every company that is capable of producing uranium. Yeah, it's a sell. It's a sell news event. I think it was probably already priced in the market, and maybe they're selling it just based because they already knew what was going to come, and it didn't exceed the expectations that people thought that Camco was going to bring to the table. So sometimes you get these sell-offs, and some people will say, "Oh, it's an opportunity to buy more." That could be the case. Some people will say it's a sell news event. Some people say it could be an intermediate, short-term top. Um, what I do is, are the fundamental driving factors of uranium still going to make the price go up? If the answer is yes, stay long. If the answer is no, that the inventories are being met, then it's a time to sell. But we're in a situation where inventories are low and people are looking and the market's incredibly tight and Camco is going to add to the tightness. So stay long. That's the way I view it, and that's what I'm doing. I'm going to stay long. If you squint just hard enough, you'll be able to see the dot-com and great financial crisis bubble and subsequent crash. Welcome to stock market haven nirvana. Enjoy. This is the little bubble there of the great financial crisis, and this is your dot-com bubble, and this is the bubble we've got going on right now. Massive move to the upside. Charlie Munger on complex discounted cash flow models, and I completely agree with this opinion. Some of the worst business decisions I've seen came with detailed analysis. The higher math was false precision. They do that in business schools because they've got to do something, says Charlie Munger. I noticed a lot of this occurred when I was at work. They would put these detailed plans together. And I'm just scratching my head. It's like, we don't even have, like, we're missing 10% of the parts. How can you put any sort of detailed plan together? I mean, just wing it at the hip because here's another thing that I find really weird about businesses in general. And I don't know if you guys have ever noticed this. Um, when I was at work, they would put everything into the system as an average lead time. That means that 50% of the time it would come behind that lead time, and 50% it would come shorter than the lead time. Well, if you want to actually produce something that is on time, why would you use the average lead time on thousands of parts? And some of these lead times are incredibly long, like a year and a half. Now, then you're going to have to look, well, what is the standard deviation of that lead time? And what kind of confidence interval do you want to have on getting the part in on time. They don't do any of that. So they just put the average lead time in. I'm like, God, guys, you guys are all like, if this is what supply chain does, this is just flat out stupid. You want a 95% confidence level or greater to get the part in, and then you need to look at your standard deviations. And then you need to mitigate around those standard deviations. It's like, come on, guys. What the heck's going on here? Anyway, interesting numbers from UBS on the jump in energy transition demand for copper. Massive jump from 2023 onward, coming from 3,942 up to 5,200, up to 5,800. I mean, look at the energy transition percent, just ripping it. I don't think that copper exists, guys. I don't think it exists out in the late 2020s. I don't think we're able to produce that amount. Art Berman, complexity will defeat renewables as it does all solutions. Intermittency is solved with battery storage. Battery storage reduces volatility, destroying product profit while increasing system costs. The result is reduced profitability and higher prices for consumers. Genius. Yeah, and that's why renewables are going to fail. Agreed. Tell me how this makes sense. China is literally the world's largest economy. And look at this. Nvidia is now worth as much as the entire Chinese stock market. With one going up and the other down, Nvidia is now worth as much as the entire Chinese stock market, represented by the H shares of the Hong Kong stock market. And China, there it is. The largest economy, the GDP by country or territory in the world. And we've got Nvidia that's worth as much as the entire Chinese stock market. Come on, guys. This is so obvious. It's a bubble. It's so obvious. Breaking Nvidia reaches the moon. I wanted to show that nice little moon. It's poking the moon at the moment. Yeah, this is not a bubble, guys. It just goes straight up like that. No bubble at all. Rig counts. Now, this is interesting. Oil is flat at 499 versus 609 a year ago. And natural gas is up 4 rigs to 121 versus 150 a year ago. Haynesville's up 2 to 42. And Marcellus is up 2. I mean, natural gas is at $1.80 something. Why are they adding 2 rigs? What is going on here? Um, Nat gas prices are at 3-year lows, and production is back to 105 billion cubic feet per day, within 1.5 billion cubic feet per day of record highs. So it's only natural that Baker Hughes' rig count would rise by 4 rigs this week, the largest weekly increase since last September. I don't know what's going on, guys. Why are we raising rigs when natural gas is $1.80 something? Interesting. Art Berman, the Permian is set to hit peak output in 2025. And if it does, it could set off alarm bells within the US and across the world, resulting in vastly higher oil prices. I listened to this. The peak is closer than you think that Adam had. He thinks it's going to peak in 2024, the Permian at least. So it's coming here, guys. It's really, really close. So we'll see if this occurs in terms of oil peaking in 2024 or potentially 2025. We've got the CEO from Oxy thinking that it will occur in 2025 before the end of 2025. Art's looking like he's saying 2025, and Adam's saying it's probably going to peak in 2024. I don't know. That's pretty interesting stuff, and it's if that's the case, oil would be the best investment of anything. India's oil minister, this is also very interesting. If we start buying more of the Middle Eastern oil, the oil price will not be at 75 or 76. It will be $150 a barrel. And guys, like this is being said by a lot of people. India, China, Middle East, Oxy's CEO, Adam Rosenswag. I know Chris Martenson. It's like, man, these things are. It's coming very soon where we could be getting into a squeeze in energy here the next year or two. I posted this. Germany shuts down nuclear and goes with natural gas? Question mark. What if uranium producers are pricing in the future actually directs more demand towards natural gas power plants? Germany approved plans to finance one of Europe's biggest expansions of gas-fired power plants on the condition that developers convert to hydrogen in future years. The government agreed to go ahead with 4 short-term tenders for up to 10 gigawatts, translating to about 15 to 20 new plants. Now, here's another thing that I don't think people are thinking of. What if uranium gets in such a dire situation where people are less, they're more reluctant to put in nuclear and more um, akin to putting in natural gas, just like Germany? The response time and the lead times of nuclear are quite long currently. But what if they need a solution within the window of what nuclear can be provided? And if you've got uranium shortages, I mean, maybe they're gonna put up a bunch of natural gas plants. I know a lot of utilities, a whole bunch of utilities, have replaced coal-fired plants with natural gas, and then they run all of the renewables to those natural gas plants and have a inverter or whatever you want to call it to turn the power from DC to AC. And maybe natural gas is actually going to be the thing that we build the most of because of availability and the lead time in order to get it done. And no, I don't think that natural gas is going to stay this cheap. I think it will go up in price. But it doesn't matter because they're going to need a solution. So a lot of people will say, natural gas prices won't stay down at $1.85. They'll go up. I'll be like, yep, I agree. But what if you need power and you need it within a year or two? You're not going to put in a nuclear power plant. You're going to put in natural gas. And that's what everyone's doing. This is going to be interesting. I mean, right now I think 45% of electricity is being generated by natural gas. Like 5 years ago it was down at like 30%. Natural gas is literally going to be a huge power generation source over the next 5, 10 years. A nat gas weather model update shows lower heating degree days in the last 24 hours. Weather in 6 to 15-day range only modestly higher than the norm. That's not enough given where the storage is going to end up. No cold blasts for bulls, at least not now. So still some bearish temperatures. U.S. government spending was almost 30% of U.S. GDP growth in 2023 and an eye-watering 24% of U.S. jobs growth. So government hiring remained a rocket throughout 2023 at 24% of U.S. jobs growth from government. This is URANM versus CCJ. Looks bullish for URANM to outperform CCJ. Let's hope that is the case. It means the smaller miners are going to start to outperform Camco. And URNJ is probably even a better way to play it for an ETF. Data from past real estate bubbles clearly shows what happens when the central banks start cutting rates. House prices always drop with rate cuts, sometimes before or after. Please present data to prove otherwise. I'd love to see it. Well, we never had a increasing interest rate environment based off stimulus. It was always the pace setter of real estate setting that pace of interest rates. This time around, it was set by stimulus, not by the real estate market. I do not think that house prices will drop after rate cuts necessarily. They could go up. It depends when they cut rates, and it depends on what is causing the slowdown in the market. If the slowdown in the market is not caused by the housing market, which I think it won't be, then you could drop rates and house prices will go up, much like the year 2001. But in the year 2000, 2001, we did have a pullback in housing starts, and we might have had a pullback, but then they did ridiculous loaning practices. This time around, there is a physical shortage of homes. We are in a deficit, at least in America. I'm talking more about America. And rates could drop, and I think prices will go up. I don't think they'll go down. So there's your data to prove otherwise. This data here is all because the driver of this is the housing market. We also had high inventory levels here, high inventory levels here, high inventory levels, and all these ones here. We don't have high inventory levels. The data you have here is not supportive of the conditions that we are in today. Good luck on for John, unless you're looking at Canada or somewhere else. This says the Fred data in U.S. houses. China natural gas imports expected to increase 8 trillion cubic feet by 2050. Europe by 6 trillion cubic feet. India imports to increase by 4 trillion cubic feet, and other Asia Pacific countries by 4 trillion cubic feet. Middle East natural gas exports to increase 14 trillion cubic feet, and the US by 7.5 trillion cubic feet. That's where the supply is coming from. We've got massive increases in demand for natural gas. This is going to be a fun one. I don't know if we have the production to increase this amount of natural gas for those LNG terminals. I don't know if it, we'll see. We'll see. And here's another view of what many call triple top for gold. That's not a triple top. It's a perfect bullish expanding falling wedge. And it had 6 attempts to break above the upper pink line. And the more times a resistance gets tested, the more likely it will break. And yeah, we'll break out at some point. And that's gold versus the US dollar bullish fund. We got Logan saying the lowest active inventory per capita in the US today than any point in history. There's your data that goes against the lowering of interest rates and a decline in housing. It's because we have no housing. Our inventories are low. All the other data that he shared, inventories were through the roof. As global oil inventories are rapidly, unexpectedly sinking, JPM sees a $10 crude jump by May. That's cool. We've got puzzling here with the 3 trillion market cap. Microsoft is twice the size of the entire energy sector in the S&P 500, which generates double Microsoft's annual free cash flow. What an overvalued company compared to the energy sector, which is just throwing cash flow and is far cheaper than that. So this is your annual free cash flow, 135 billion. So it's 2x, and it is half the price. That's what's called value, guys. That's value. And that's where I'm going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Don't forget, we've got a 7 a.m. Sunday question and answer session coming up if you'd like to ask questions. But that's what I've got for today. We'll catch you next time. This is Finding Value.